Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for, should probably change that to the correct date. It will be in a second. There you go. April 28th, 2025. I titled today a Doji Day Afternoon, thinking back to a movie when I was growing up called Dog Day Afternoon. Again, it's April 28th, 25. Email address, the new one is the Market MRI Pro at gmail.com, also htsidoc@gmail.com. As the name states, it was a Doji Day, and it's an indecision day. Market wasn't certain what to do. It can be the beginning of a reversal, but it could also be a pause to refresh. This session, like all, are for education purposes only. Any recommendations are in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. And I have tools for multiple platforms, but I'm an independent trader. I just want to remind everybody, Orange County meeting, June 6th through 8th. As you can see at the Residence Inn and Suites in Tustin, which is in Orange County, California. It is $300 for 3 days of education and interaction. It goes to $400 on May 1st. We are over halfway full in the room. Excuse me. So we'll fill up the room, and we'll most certainly have an internet option. The price will be the same whether you're in the room or on the internet. In fact, we appreciate the internet folks because they defray some of our costs without adding to it. Little secret. That's not hard to figure out. Whether you can make it or not, all the speakers will give you recordings of their videos, and in my case, I'll give you my PDFs of my presentations. If interested, reach out to Greg Mills at gam72054@aol.com. As I've mentioned before, John Person, Dan Fitzpatrick, and Chris White are confirmed, and tentative from Matt Caruso. So you add Dev Keshav and myself, and I think you'll have one of the best groups of speakers that we've ever had, and everybody here trades. Join my Google group, Top Down Trader. You just go to Google Groups, search for Top Down Trader, and go ahead and join. It's free, no solicitation. I'll give you discounts on my tools, and you'll get an email from me almost every night with a video attached, even the days that I don't put them on YouTube. In addition, I'll be inviting the members of the Top Down Trader group on May 5th, which I believe is Saturday, from on the East Coast. It'll be from 11 to 1. I'll do one of my marathon seminars of top-down investing, looking not just at my app, but at TradeStation, TradingView, HGSI, Wealth Charts, and other programs. So love to see you there. Just join Top Down Trader to get the link. Lots to think about for what happens on, I did this again. Let me just pause it and put the right one up. All right, here we go. Monday was obviously an easy day from a news perspective, but still big earnings. Tuesday, we've got trade balances, retail inventories, wholesale inventories, the Case-Shiller home price index, confidence, and job openings. So a ton of news. Any of that could sink the market. We've also got some before the bell earnings from some small companies you may have heard of, such as PayPal, UPS, Coca-Cola, Pfizer, Royal Caribbean. And then after the close, we really have some big ones, Visa, Starbucks. And then you look at the rest of the week, Microsoft, Meta, Robinhood, Amazon, Apple. So there's all kinds of opportunities for this market to go up or down based upon market-making news. As I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Let's go look at the charts. Perfect. Close this down. So if we look in the Market MRI Pro app and we start with the daily briefing, we could see that volatility led on the session. The Russell was the best performing of the indexes. The diamonds also up a little bit. The spiders were flat. The Qs were flat. Now, interesting, when you look over here at where they were in the closing range, you could see that they really fought their way back from a low open and closed above the middle of their range. The VIX, even though it was a biggest mover to the upside, was in the lower third of their range. If we look at the new high, new lows, the NYSE on the left, NASDAQ on the right, here's the highs minus lows. We maintain positive on the NYSE, and we're getting close to positive on the 52-week time frame or 12-month time frame on the NASDAQ. The other time frames are positive. This is definitely an improvement. When we look at the S&P 500 sectors and we look at one-day performance, we can see that leadership was energy, utilities, real estate, healthcare, so a much more defensive stance, although staples was at the bottom, and tech and discretionary, which led last week, lagged in the session on Monday. We can see uranium and clean tech, even biotech, gold, exploration, telecommunications were some of the leading themes. Over here, and to me, I guess what I really like is this line here. 63% of the S&P 1500 were up, 51% of the NASDAQ, and 62% of the NYSE. Again, the NASDAQ underperformed. And you could see here the number of sectors up versus Friday, the number of industry groups versus Friday as well. Lots of information there. The buckets give me a sense of whether we're approaching an overbought or oversold area. I'll keep it short and say we're neutral. The market breadth gives me a sense of what's going on in the market. On the left is the NYSE, and on the right is the NASDAQ. And they really are different. The NYSE had another strong candle and was up. The NYSE was kind of pretty much flat on the session with a doji. So this is the first of my doji day afternoon dojis. Indecision coming into resistance, strong day coming into resistance. I really think this resistance is the key. If we look down here, you can see this breadth thrust on stocks above the 20 days, whether you look at the NYSE or the NASDAQ. Down here, you could see new high, new lows were positive on the NYSE, still negative on the NASDAQ. AD line was positive on both as were up-down volume, and there were no new market signals on the bottom. If I go into my timing model, we'll see that we're still in a sell in the weekly. Here is the signal here on the spider, Qs, diamonds, and the Russell. What changed in the market on Monday was that all of the dailies are in a new buy signal. That is a bullish thing, but remember where we are. And when I say I'm in a buy signal, I think what it really means is we are in a retracement in an uptrend because the longer term signals are still bearish. But we got to play the market we have. And right now that would be evidence for the bulls who might be thinking they want to take more positions. And I do think that still is a question mark. I'm more neutral on the market, which sure beats what we were a couple of weeks ago. But retracements in an uptrend, you can make money to the long side, but you have to be very careful, tight stops, and be ready for a reversal. When we look at the U.S. indices, let's just take a look at depth of the spider. You could see another doji. And here you could see the spider was up. Looking up here at the white percentage move on the day was up 0.05%. So relatively flat day with a doji approaching potential resistance. That is a theme of the day. We look at the Qs. A doji approaching resistance. Now that may be a sign that we may consolidate here for a while, which frankly would not be a horrible thing because we have had a pretty brisk snapback here. Now let me extend this line a little bit. Now, I didn't know if you all knew this, but we added the ability to crunch up and move around the pattern, which helps, I think, on some of the stock charts. But you could see the diamonds. Let me see if it'll let me write. I know we updated the program to include it. Let's see. Yep, I got to do it in the other charts. We took out a trend line that ran here, We still got this one here on the diamonds, and we have the falling 50, and again, our Doji day afternoon. And not to be left out, the same thing occurred on the Russell. Which has broken out, but now below resistance has a doji. If I look at the VIX, it was up 1.25 today, and the dollar was down 0.62. Not big moves anywhere. On the commodities, dollar was down, so what do you think gold did? Well, you're right, gold went up. And you could see here that gold was up 1.42%. Silver, but a nice opportunity to think about buying SLV here, sitting at the 50, had a nice move up as well and was up 0.5%. Not much happened in oil. It was down 1.84. And natural gas giving us a breakout here, up 1.29% off of the 200. So that could be an interesting area, to look at natural gas. 10-year dropped down to the 200-day moving average. It was down another 1.17%, while the 30-year also was down 1.06%. If we go into the JAS layout and we go into the top-down view, here's my 11 sectors, here's all the industry groups, and we look at percentage move on the day, real estate, energy, utilities. Boy, is that defensive. Rather than pick the top sectors, I'm going to go the other way, and I'm going to rank by percentage change on the day my industries and take the top 10, 3, 4, 5, 6, 7, 8, 9, and 10. And then I might do my analysis on these 167 stocks. Now, I can scan for certain things here. Maybe I want to get these volume greater than 500 and price greater than 5. Hit OK. So now I've got 93. Now I like to rank them by 2-day momentum, and I'll just go through the list. UPC, don't know anything about it, coming off of a deep sell-off. DEA, nope. I like uptrends. So if this broke above the 200, I might be interested. 200 in red. Same thing with Apollo Global Management. ANIP Pharmaceuticals, ANI, breaking out to new highs. It's getting extended. Look here at the last earnings for February 28th with a big surprise. Nicely growing revenue, but you could see this is a relatively, from earnings and revenue, not a big stock. All right, PCRX. The problem with knowing the companies from my day job sometimes colors my assessment, but I really do like what I see here. Long term, it's been destroyed, but we've been in an uptrend since August of 24. And then we had a pretty significant pullback to the 50, and now we're running again on the weekly. And on the daily here, 3 dots down here, so that's a volume breakout momentum out of a squeeze with relative strength above the moving average at OBV, 75 on the high-low. I think PCRX looks okay here. I saw a CCJ over the weekend. I'd like to see it above the 200. But I think if I didn't see the 200, I'd be looking at something like this and saying that's sort of one of these wedge pops where you popped out of the wedge, because you could probably come in here and do the same. Let's try that again. And it broke out. Again, it's got that 200, but that's a pretty powerful move with big volume, relative strength. That OBV looked good and not extended. INGR, let's go here. Ingredient, that's all right. Tornado Trust, Aries. Here's another one I like. Again, it's in an uptrend. It's gotten kind of loose here. And I think this one might be getting ready to go out. It's had a CPR signal today, a breakout momentum, relative strength, and OBV turning up. So I would typically go down this list very quickly if I'm on my own and just see if anything meets my standards. Now, I am a big believer that using a top-down approach and looking for stocks in the best industry groups is going to put the wind at my back and make it so I have a better chance of winning. So I found a couple already. I also can do a bottoms-up analysis, and if I leave that 500,000 and the $3 price in, or I think or $5 price, one of my favorites is the 2-day momentum up, but it really didn't have anything of note. It's got this ENGS, which is, don't know what they do. It's brand new. Energy Group, signs member, standing to acquire, Energy Services Corporation, Energy Storage REIT, is that what it is? All right. And then the other is at UPC, which is a pretty cheap stock. But I have some other signals I like. So I got to take off that signal. So let's clear that. And let's drop down my selector. And let's pick multi-time frame CPR buy. So it's going to find stocks that are in a weekly uptrend that just fired today, a daily uptrend. Same price and volume. And let's see what comes to the top. Got 82. Let's rank them by 2-day momentum again. And just quickly run through a couple of these. Texas Roadhouse. So downtrend. I'm just looking for something that's crossed up and looks like it's already moving. I'd rather buy something that's broken out and pulled back than wondering when these stocks are going to break out. Welltower's okay. It's very global group. Yeah, this one looks interesting to me. Uptrend, pullback, breaking out above the 50 here. Had a CPR signal, which it had to by the searching. Breakout momentum. And I just go down the list. Now, am I seeing great stocks that I just have to go out and buy? HR Block is interesting. Again, I don't like the name, so it colors my thoughts. May be as good as anything I saw. If it can get above this point here, EVERG. EVRG looks interesting. Gilead setting up. There's that Lantheus again. So I basically will run through looking for stocks that meet my criteria. On a day where the market did nothing, I may not find anything. So that's enough of those. And then very quickly, I like to look always at the favorites of the audience, which is typically, can we look at the, I got to kill my cardinal sin. If you put on a scan that limits the stocks, take it off before you look for something. Amazon, let's just quickly look. It's broken out above its trend line. Yeah, it didn't really have a great day, down 0.68 on Monday, but has broken out, has to get above the 50 and 200, so I'm still a little bit cautious there. APP is one that I got into, is slowly moving up. We'll see if it can break above the 50, which might give me another buy point. Google had a nice earnings and really isn't doing anything. It had a little run up, but Friday it failed and it was down again, down another 0.83%. Meta, I mean, like Amazon, is trying to make its way up. All these stocks are going to have to deal with the 50 and the 200, which would be potential areas of failure. Microsoft, if I had to pick one of these to buy tomorrow, this might be my choice. It's already broken out. Had its own doji-like candle down just a teeny bit in the market. Looks poised to go higher. Netflix is the best of the bunch, but at what point is it expensive? The high jumps at 100. NVIDIA, like the others in the group, have broken out of the trend line, but still have to get above the 50 and the 200, and still does not have higher highs here. And then lastly, Tesla, which sold off a little bit after an initial pop, is going to have to get above the 200, but a trade above the 200 would make this interesting. But the problem with both Tesla and Microsoft and you better check the others if you're looking at them. And again, this is education, not investment advice, because they all got earnings this week. So be very careful, and we'll see you tomorrow. And come think about joining us in Orange County, live or online.